Hey, this is your mortgage guy, Dan Keller, and I want to take a moment today to help you better understand what in the heck is going on right now with the economy. There's a lot of misinformation out there in the media. There's a lot of, right now, information that's going to cause you to make a poor financial decision relative to buying a home if you're a first-time home buyer. So this video is for all of my first-time home buyers and people thinking about buying a home in 2022 or 2023. So right behind me is the Jetty Bar and Grill. I just finished having lunch with one of my good friends and clients. And he doesn't need my services because he's paying cash for a vacation home. And I share this with you because when there's cash in the marketplace, there's confidence in the marketplace. So no, this guy is not falling right now. Yes, is the market cooling down from the last 5 years of a massive appreciation, massive supply and demand issues? Yes, but we still have supply and demand issues. Right now, we're just dealing with a couple of economic cycles that we're gonna cycle out of. And if you play your cards right, if you play your hand right now, you can come out of this in 6 to 12 months in a better position than people that bought a year ago or 2 years ago with really, really low 30-year fixed rates. So I'm gonna bring you into my office right now. I wanna go over for about 4 or 5 minutes some information that's gonna help educate you, but help you make a smart decision as you consider buying a home. Let's head into the office. All right, so one of the keys to successfully buying a home is to understand the seasons and the cycles in the economy and in real estate. Now, 15 years in the mortgage industry, I'm 46 years of age, plenty of money in the stock market, plenty of money in real estate. I can tell you, because of the education, the meetings that I've had with my financial planner and mentors, I understand this. That's why I'm not worried right now at 46 years of age of losing all my money and losing real estate or losing money in real estate in the stock market, because I understand seasons and cycles. And what I want to teach you today is a little about the economy, the cycle that we're in right now, because banks, credit unions, and real estate companies, the media, universities, you name it, they're not teaching this, and they should. So what I want to start out with is right now, July of 2022. We're still seeing massive inflation. What caused the inflation? There's this tweet that I have referenced in the past, and it said they printed $8 trillion, gave you $1,400, sent the rest to their friends, and left you with inflation. In a nutshell, that's what happened in 2020. Even before that, starting with the Obama administration, stimulating the economy out of the 2008 through 2010 crash, the Federal Reserve printed a lot of money. Well, it caught up to us, and now we've got an inflation issue. So what they're doing right now is they're trying to combat inflation. What we need to understand as consumers, as Americans, is that this is a cycle. Right now, you can see from 1940 to 2022, these spikes of inflation, they come in cycles. We have inflation, and then the government tries to suppress that, pushes us, gets Americans to stop spending so much money. It pushes us typically into a recession. And let me hit pause on this before we continue to talk about these cycles. When you hear the word recession, please think of opportunity. Don't think of 2008 to 2010. A recession isn't a bad word. A recession is simply the opposite of what we're seeing right now. High gas prices, high costs for supplies, high costs for services, grocery bills through the roof, right? The opposite of that is lowering the cost of all of that so that you as an American, you as a consumer, spend more money. Right now, the government wants to curb some spending to reduce some of the inflation. So what you're going to see here with this slide is that inflation is just a cycle. It's an economic cycle that we go through. We go through inflammatory times, and then rates and the cost of everything go up, people stop spending, and then we go into recessions. And what triggers us to spend more is when things become less expensive, like rates and the cost of goods. What you do need to understand is that mortgage rates go up during inflation, times of inflation, like we're seeing right now. 30-year fixed rates are north of 5.5% right now. They go up. But they also come down during times of recessions. So what I want to talk about real quick, though, is the impact of rising rates and home values. There's a lot of myths right now that the housing market's going to crash. The housing market's not going to crash. I'm going to support that. And I'm going to close down this video today with information that you need to know relative to how I'm going to prove that a recession is coming. There's 4 economic indicators that drive every recession, and 3 out of the 4 have already taken place. But the impact of rising interest rates and home values, get this, historically speaking, and this source is from Fannie Mae, it's a credible source, you can fact check this. Historically speaking, when interest rates rise greater than a full percentage point, it doesn't have that big of an impact on home values. As you can see this, home values still go up. They still went up every time we saw a massive increase in interest rates. So these high interest rates are not a bad thing. I'm going to come full circle on this in a minute and show you how to capitalize on this opportunity. Fannie Mae, Freddie Mac, you've got Zillow, and you've got Redfin, the National Association of Realtors, Goldman Sachs, CoreLogic. They all forecast home values to go up 6 to 8% in 2022, despite rising mortgage rates. Now, just recently, I pulled statistics from Snohomish and King County for June of 2022, and we saw that homes are still selling at 99.3 to 105% of list price. So list versus sold, that means that they're selling full price offers. The problem, and what's allowing this to sustain, what's allowing home values to keep their level of, to prevent their values from dropping, is the fact that we have a supply and demand issue still, despite rising interest rates. So check this out. We have home builders that are about 20 million homes behind right now. You can see this from the 1940s. This is measured in 10-year increments. That the U.S. has averaged about 20 million homes new homes built per every 10 years. Over the last 10 years, we've only built 5.8 million. We're 20 million homes behind schedule. Plus, you have 140 million millennials, well-qualified millennials with good credit scores and good jobs and money for a down payment, entering the housing market in 2022 and 2023. We have a lot of cash still in the marketplace too. And what I said earlier with my friend, cash in the real estate markets means confidence. Consumers still have the confidence the housing market is strong. Now, I'm going to cite an article here in a second. And this is from Blackstone's Joe Zittel. And he said that home affordability at 2007 bubble levels, but crash is unlikely. And here's why. Homeowners have equity. We still have tight lending and credit guidelines. We have very little inventory, meaning the supply and demand crisis is still there. And we still have solid jobs. Okay? We'll get to jobs here in a second. But I want to jump now to these indicators that show that we're going to be in a recession and then prove to you why recession's not bad for you as a home buyer. Number one, when the 2-year and the 10-year treasury invert, meaning when the 2-year becomes less expensive than the 10-year, you can see this data that every time that's happened, within about 7 to 20 months, we hit a recession. So the 2-year and the 10-year inverted in March of 2022. Okay, ... We're in that period. The other thing that's happening right now is we're coming on 2 consecutive quarters of negative GDP, negative growth in America. That is factor number 2. Normally when that happens within a year, we are in a recession. Number 3, the Fed rate hike. Normally, and this is historically speaking, when the Fed raises the Fed funds rate greater than a percentage point, we are about 11 months away approximately from a recession. That started happening in March of this year. In June of this year, we saw a 75 basis point increase, and they're scheduled to do it again in the near future. The last thing I want you to watch is unemployment. We've got great, very low unemployment numbers right now, but as you start seeing the unemployment rate increase, that's another sign that a recession is 6 to 12 months around the corner. So what does all of this mean to you? Recessions and mortgage rates, as you see on this chart, every time we hit a recession, mortgage rates drop. You have an opportunity right now to buy a home at list price. You have to understand that over the last 3 years, my clients are having to pay $50,000, $70,000, $100,000, $200,000 over list price. You have the opportunity right now to buy a home at list price. But Dan, what if the home value drops in the next year? Cool. Let's say your home value drops by, let's play devil's advocate, 10% over the next year, which resources and credible sources say that it won't happen. Well, let's say it happens. But when we hit a recession and mortgage rates drop, you know what it's going to do to the housing market? Just like it did during COVID. It's going to cause a boom, and the housing market's going to go up 15, 20, 30% again. All right? So you got to understand these cycles. You have to understand these seasons. Rates drop during recessions. When you hear the word recession, think opportunity. You can buy a house right now. Yes, the interest rate's going to stink, but in 6 to 12 months, you can refinance that rate. So you buy the house. You can't go back and rebuy a house, but you can always go back and rework your mortgage. You buy the house, you rent the rate. That's my concept right now. That's my advice right now. Recessions in the housing market. Look at this slide right here. Every time we hit a recession, these gray bars are recessions. Look what home values do. They increase at or after recessions. In closing, you guys, listen, it's so important that you understand this. Don't let the media talk you out of making the largest and probably most important financial decision of your life. Lean on professionals that study the data. I will literally look you in the eyes and tell you if I think it's a bad time to buy a house. I do not think it's a bad time to buy a house. I think it's a great opportunity for you to buy your first house right now. I'm going to leave you with a quote from The Wealthy Dad. It's a tweet from The Wealthy Dad, someone that I follow on Instagram and Twitter. If a recession does come, your best play is to ignore all the doomsday chatter. As bad as times may seem, history has already seen it before. War, high inflation, oil issues, pandemics, and the markets recovered every single time to all-time highs. This includes your 401k and your stock market. He goes on to say, go into a mental silo, keep buying and holding through the storm, and you'll come out the other side in a great financial position. Listen, this message is for you, my clients, my future clients, people that are considering buying their first homes, people that are already approved with me. This is a great opportunity to be in your shoes right now. I've been there before. I'm looking forward to walking side by side with you through this. If you need anything, let me know, but there's big opportunities out there, okay? Bye for now.